All right, welcome. So, thank you all for joining me. I know it's late on a Thursday. You've had a few long days hearing about identity. We're going to switch gears a little bit. We're going to talk a little bit more about financial services and ecosystems that you build on top of this identity layer that we've spent 3 days talking about. So, welcome. I'm Mark Straub. I'm the CEO and co-founder of Smile ID. Smile ID is a identity verification and authentication platform. We provide services across the African continent. We're well known by many businesses that do retail and digital banking, payments, credit, and even ride sharing and shared economy. What I'm going to talk about today is some of the principles and building blocks that we've seen that are successful or critical to success in building an ecosystem outside of identity. We can get started. Cool. Okay. So the whole idea of this talk and then the panel we're going to do afterwards is this idea that to build a full financial stack out of your ecosystem, uh, there are some building blocks and some key principles that we think are important based on our observations. And I will start by saying that I'm assuming that everyone who's listening to this already believes that we need a national ID system of some kind. We believe in digital public infrastructure of some kind. So great, you believe in DPI. Now, how do you get from DPI to ecosystem? Next slide. And the reason why I think it's really important to think about first principles when you're doing this is that it's easy in the chaos of execution to have to respond and be reactive to all the different stakeholders, whether that is your constituents, it's the budgets, the donors, the businesses, the vendors, your own employees. And first principles helps you cut through the chaos of execution and prioritize. So next slide. So the building blocks, as I see, and this is kind of just foundational, is you need some sort of a national ID system or framework so you can have a source of truth, a source of trust. We can debate what form that should take. We're going to have some interesting points of view on the panel, will be great, but you need something in place. The second is, and that this is really important, I think people don't always understand that this is what's behind a lot of the success stories. Having a instant free or near free account to account payment rail is fundamental if you're going to move economies from a cash world to a digital financial services world. Otherwise, the cost of doing digital is too expensive, and you end up with a large part of the population that is not active in the digital ecosystem. If you can get down to free or near free instant payments, and oftentimes this means building a national payments interface, that is a foundational building block. The third one is a little bit more murky, and I like to call this the digital accelerant. And this can take different forms. We'll talk a little bit about what those forms might be. But these are kind of three building blocks you need. You need a national ID system. You need account-to-account payments that are free or near free and instant. And you need some other factor to accelerate the ecosystem. We'll go to the next slide. And so the question is, ID payments and what? What is that other factor? Is it magic? We'll talk about why I think it's actually not magic, and you can actually replicate some of the successes we've seen around the world. Go to the next slide. So I like to look at examples from different parts of the world, and actually, three different continents. So I think the point about these principles and building blocks is that they're not unique to Africa, they're not unique to Asia, they're actually universal. And the first example, which is, India, I think is now become, for many people, the canonical example of how these ecosystems can get built and can radically accelerate a country's economy. So obviously, Aadhaar, many people are familiar with. We're very fortunate. One of the panelists who's going to be on stage with me was intimately involved in the building of that national ID system. So Aadhaar as the national ID system, and then really critically, the UPI, Universal Payments Interface, was an example of an instant account-to-account payment system. The combination of those things gave the Reserve Bank of India the comfort to roll back some of the rules that previously had prevented people from doing mobile payments and digital payments. And then you had the entrance of Geo, which Reliance Geo basically entered the market shortly after the creation of these pieces of infrastructure, and gave away free mobile internet for 6 months, got to 100 million users, the fastest growth ever in the history of telecom. And now you had applications. So you had people able to do things with this, foundational infrastructure. You had applications that were being created on the internet, and you had the ability for people to use those applications. We go to Brazil, different ID system. There has been a national ID system there for a while. Only recently has the government actually built a biometric ID system, but it did pass legislation years ago that enabled the creation of biometric authentication as a service. And so the national ID legislation around that and the data privacy legislation around that led to the creation of a couple of major identity companies in Brazil. And that combined with PIX, which was the instant payments system, which rolled out around the time of COVID, it led to rapid growth and tens of billions of dollars of value creation in neobanking, especially Nubank, which issued free uh, cards that could be then used for e-commerce. You had Mercado Libre. The combination of free cards and e-commerce gave applications so people could actually do things with this infrastructure. And now you have a very vibrant ecosystem in Brazil. And the third example, the one that I'm probably most familiar with, is in Nigeria. And in Nigeria, everybody's probably now increasingly familiar with NIMSI. It's become the national identity, foundational identity for the country. But you also have NIPS, which is the instant payment settlement service, which is offered by NIBS. NIPS has actually been around for a while, a long time, and in some ways it's predated some of the other infrastructure that we've talked about. But the combination of this instant payment settlement system with a foundational identity has led to this ecosystem of agency banking and neobanking. And now most of the volume that happens on NIPS is actually driven by companies like MoneyPoint and OPay. And there's been something like an incremental $3 or $4 billion of investment in payments innovation in Nigeria that has accelerated the ecosystem. But these building blocks were in place. Next slide. So what do I take away from these examples? To me is these digital accelerants happened, and they happened because there was a set of key principles that actually were largely being followed, or largely existed in these markets. And to me, the key principles were, first one, you have to build reliable infrastructure. So it's not enough to have a national ID system or an instant payment settlement service if it goes down 15% of the time. Even 7, 8, 9% of the time, we still see this in various countries. And imagine a road or a bridge that just randomly was closed, or cars would get stuck on it, at 3 in the afternoon on a Wednesday when people are trying to get home. You can't have infrastructure that's unreliable. And the problem is that if we'll talk about centralized versus decentralized, but a single centralized system may not always be ideal, at least unless you can invest in massive amounts of performance and reliability. That is sort of table stakes if you're going to do this. If you can go to the next slide, if you don't do this, you're going to end up with a national ID system that looks like one of these rows. So I can tell you this is from our internal systems. We monitor the uptime of different national ID systems that we're connected to across Africa. We spend a lot of time. I've been doing this for 9 years. We've integrated into 25 different ID systems across Africa. We see the performance of those systems. We know how reliable they are. And the red, unfortunately, is downtime for those systems. And so, I can't tell you which countries are on the left here, but I know which countries are reliable and which ones aren't. And ultimately, the market knows, because then they know whether they can invest in an application or a business or a ride-sharing service that relies on that piece of infrastructure, or whether they can't. Next slide. So the second is you want to adapt and align locally. You can go to the next slide, or next. Yeah, you can push next again. So basically, I have this one of my favorite slides. My CTO makes fun of me all the time. It's kind of like a McKinsey slide. I call it the power wheel. Basically, the idea is that in every country there are these existing power structures, whether it's banks, whether it's telecoms. Some countries are more bank-led in their regulation, like Nigeria. Some countries are more mobile money or telecom-led in their regulation, like Kenya or Ghana, for that matter. These things don't follow a geographic principle. They're more just a reflection of market realities. There we go. You can love your infrastructure like a baby, or like you love your kids, but you know that for them to fully flourish, you need to let them get out into the real world and interact. And so, we can go to the next slide. I picked this. I tried to think of something that was cuddly and cute, but then used by everyone around the world, and tested and stress tested by everyone in the world. Linux has this great, lovable little penguin as their logo, but Linux is now used by something like 90% of the major web servers around the world. It was the foundational kernel that created or was used to create Android. So it is ubiquitous in its usage, and it's better because of that. And your infrastructure will be better if it's heavily used. Keep going. Uh, I heard this in Raul's talk yesterday. The world has invested billions of dollars in building technology standards. They exist for a reason. Use them. Uh, and not only use them, but also make it clear to market participants what the rules of engagement are for your country. So you may decide that you don't want just anyone to access your infrastructure. That's fine. Create rules and say, these are the rules if you want to access our infrastructure. These are the rules if you want to do business in our country. The rules are public. The rules are based on standards. If you can meet the rules, you're welcome in. Next slide. I added this one. It's a little bit of a kind of an ad hoc to the standards thing. International standards are great, and sometimes it's okay to also adapt for local conditions. So specifically, Brazil was facing a fraud problem, and they added a particular piece of a caveat in some of their data privacy legislation that said if you collect specific data that relates to preventing fraud, then you can collect and store this data. So my point is that standards are great, data privacy is great, and it's also okay to adapt to specific realities on the ground if you need to. Next slide. Um, so this is something we spent a lot of time on, and our company now is actively building and leveraging artificial intelligence. We use it for identifying whether a document is real. We use it for identifying and preventing and blocking deep fakes. But the reality is that AI is accelerating fraud. Go to the next slide. And this is an example. Just 3 years ago, if you wanted to generate an image of Harry Potter, that's the best that artificial intelligence could do. Fast forward, this is actually now out of date, but fast forward basically 2 years ago, and you can start creating hyper realistic images of people. And we began to see attempts within our client base, people actually doing face swaps. So I'm going to take somebody else's face, put it on this model of a real person, and attempt to uh, defeat biometric authentication through the use of a deep fake. We had to build AI to stop this. So you can't really stop AI without using AI. We're doing that, but the point of this is that AI is accelerating fraud. It's very hard to stop. You need to leverage private sector technology. You can do that by allowing companies into your ecosystem as long as you've got standards and rules. Keep going. And I guess this is kind of the last one. I borrowed this from a guy named Pete Donat, who was part of First Data as a big payments company. And he basically said, if you're going to introduce a new ecosystem or a new payments ecosystem, the economics have to be better for all participants than the previous system. Otherwise, you won't get adoption. And so you can go to the next slide. The examples I like to give are, of course, UPI, this is India, and NIP, this is Nigeria. And I know the graphs are a little bit tricky to read here, but basically they had massive adoption both in UPI and in Nigeria. This is actually the trend looking at different years. So 2020, 2021, 2022, 2023. The big spikes are the recent years, 2023 and 2024. We've had massive acceptance and utilization of these payment rails, but fundamentally it's because they're better for consumers, it's better for businesses, it's better for banks, and so ultimately there's broad adoption. If you make your infrastructure too expensive, people won't use it. I've seen this happen. Very recently, I've seen this happen with different national ID systems. They create a great national ID system. They make it incredibly expensive. People don't use it, and they actually go backwards in time. They go back to manual verifications or manual onboarding. Even as recently as a few weeks ago, we saw in South Africa a proposed price increase, a 10x price increase, verifying against the national ID infrastructure. Of course, all the credit bureaus screamed because it's going to make credit unaffordable to people. So you may think, oh, we can monetize this infrastructure. We can charge a lot for it. That's great for our economy. The problem is that if you make it so expensive to use the infrastructure, then the private sector moves away from it, and you actually have people go back in time and start using older methods, and it discourages financial inclusion. So don't make your infrastructure too expensive. Make it, either free or as close to free as you can. And I go to the next slide. So basically, in summary, we've got you've got building blocks, national ID systems, payment systems, and then some sort of magic. And if you go to the next slide, my argument is that actually the magic it can be deciphered. It starts with following key or best practices and key principles, reliable infrastructure, adapted to local environments and power structures and channels, open to industry, using tech standards to protect data and to protect your population, leveraging the private sector to help you prevent fraud. So leverage best technologies, and then align the economic incentives of the participants in the ecosystem. And if you do these things, next slide, it's not magic, it's good policy. ID systems, payments, good policy, great financial ecosystems. So that's my talk. I hope you found it useful. If the ID for Africa folks are interested, I'm happy to make these slides available. And with that, I think we'll shift gears. I've got some fantastic panelists who are going to join me. You can go to the next slide here. And we'll talk about some of these ideas and how they might actually be applied in some of the countries that are here visiting today. Thank you. So let me invite up on stage Nail, the CEO and founder of Chapa. Chapa is one of the fastest growing payments companies in Ethiopia. It's a fantastic business. Nail, please come join us. Raul Parth from Tech5, co-founder. He gave one of the keynotes yesterday. And Marcel Baruti from the Botswana Bankers Association. Guys, why don't you guys, yeah, we'll grab these chairs. I'm going to pull mine out a little bit here so I can see this. Cool. Yeah, please. Great. Hopefully we've got a couple of mics. So I thought I would ask a couple of questions and just get each of your own perspectives and experience, because I think you have unique perspectives from the countries either that you represent or that you've worked in, and I'd love to hear how some of these principles or building blocks sort of reflect, or maybe they don't reflect your own experience in the markets that that you've been living and working in, and maybe when you give your answer, please also you can just give a brief background and introduction. But Nail, I thought maybe I'd ask you. I picked these examples: Brazil, India, Nigeria, and honestly, like I could probably in 2 years, I hope, put up Ethiopia here as an example. And I'd love to get your perspective on how you see these concepts playing out in Ethiopia, what you see that's already there, maybe what's missing.
Okay, sorry. So yeah, first of all, thank you for guiding such a wonderful panel. And my name is Niall. I am Chapa's co-founder and CEO. So Chapa is basically the Stripe of East Africa. So we are an online payment gateway that enable businesses to receive online payments from anyone and anywhere in the world. So that's what you do. I think the missing block from this, what I would call, is the magic part from the one that you mentioned. Because so Tapa, we were actually using the national ID to verify individuals. So we call them entrepreneurs. But the thing is, the National Bank, they told us like we shouldn't start onboarding individuals because of the risk issue. So we could only onboard businesses. But we were actually using the national ID for 2 3 months to onboard entrepreneurs. So I think the good policy part is the most crucial part, as you mentioned, on the deck. And if that's actually reliable, I mean, we used it for 2 3 months for the national ID using OTP on the verification. So I think if that can be the magic part can be actually solved, then I'm sure we would achieve what India, Brazil, and other countries actually achieved in a very short time.
Maybe, Raul, what's your perspective on this? Obviously you've done work deeply in one of the markets, India, but you've also been active in Indonesia and Honduras, and Ethiopia now. How do you think these principles or concepts line up to what you've seen? And are there any gaps things that I missed? Yeah, sorry. Here you
Yeah, first of all, thanks for having me here. Definitely, I think you covered it well. It starts with the trust anchor, which is the foundational ID or some form of ID framework. And then what we have seen is that, which is quite natural to human beings, is that you set up a centralized authentication system and then, somehow try to bring it all in the middle, which is very difficult for scaling from a scaling perspective. It also puts a lot of security, cybersecurity risk, on top as a burden. Now, it could be any sector. It could be payments. It could be, financial sector to be specific, right? So if you can build a infrastructure that basically allows you to scale and optimize in a way that without increasing the burden on some authority, democratize the whole authentication process or verification process, you can also scale the trust because when you have a central system, okay, the trust is also centralized. When we decentralize it, you can also scale the trust in a way, and which solves your problem of unreliable infrastructure. Uh, Again, and as you also rightfully said, is that the policies around, how do you ring fence it, guardrails, everything is key, and you have to adapt to the local markets. But the one thing that we have been observing everywhere, and we're seeing now changing, at least in few countries that we are doing this now, is that people have certainly realized that there is this thing, a decentralized approach of doing things. EU has done a great job of writing the ARF, the whole, PIDAS regulation. It's a opportunity for the other countries to somehow take that, adopt it, and then bring it to their countries. Now, layering it with payment rails, is just another layer on top of it, because identity will put the trust, establish the security, and then making that easily available becomes a cakewalk in my world. So yeah, in short, these are the right ingredients, and be it Latin America, be it Africa, we are seeing countries thinking in the right direction at least.
Moselle, maybe you could. Oh, all right. Moselle, maybe you could share with us, with a country. So, Moselle, you can give your brief introduction, but I wanted to hear your perspective coming from Botswana. So, a country that it's much smaller, um, have specific industries that are high value, that are unique to that country. How do these concepts play out, in Botswana? What are the components or the building blocks that are already there? What are the things maybe that are missing?
Uh, Thank you. Thank you for the invitation. My name is Musaleva Ruti, head of technology at Bankers Association of Botswana. So the background of the Bankers Association of Botswana is that it is a clearing and settlement for all the commercial banks. So what had transpired, or what we realized along the way, was that we had issues around the va- valid, validating the IDs. That is, now I'm getting back to your building blocks. So I realized that from your building blocks, the main key issue there will be the ID, the identification of a person or a client for the banks. So what happened was that we realized that under any normal circumstances, the ID will be sitting with the immigration or the government, whereas we are the private sector. So the immigration were refusing mostly to give access to other independent private entities. So we went as the single voice for the Bankers Association to say, can we interface with yourselves so that we give the banks the access to the IDs that are sitting with you? The other thing that we're trying to solve there, you realize that many clients are multi-banked. One client will be banking with bank A, and then the other one bank C, and so forth and so forth. So when it comes to providing those identifications, they are now going to be required to produce all those papers in all those different banks. So what I did for them was to interface with the immigration and then allow you so that when we get to Okay, sorry for that. Now it's more audible. So what I was saying right now is that from the Botswana market. We are the Bankers Association. We have brought together all the commercial banks. And then we realized as a problem, the verification issue. Because our clients there, they are multi-bank. You realize that one client is banked with bank A, B, C, and so forth. And then when they are required to produce those IDs, they will be forced to move around all those banks, depositing those information. Then we decided from the Bankers Association to now interface with the immigration and get what we thought was the most authentic information to pass it through to the banks. The other way they were doing this verification or identification, they will ask their clients to go and maybe get a certified ID from the police. And we realized that with the police, what happened was that depending on the size of the queues, if the queues are too much, normally they will just stamp or verify or sign, append their signatures to the ID without even verifying. So we are saying ours will be the most authentic because we are taking from the life pot of the government. I think even the government or our governments, I think there is a certain UN charter that has given them the right to be the only one holding that information. So from your building blocks, I realized that the ID was the most important thing. Then the payments became the second important given the issue of your digital acceleration. So I also managed to come up with my own building blocks to ensure that our clients are now being serviced efficiently and effectively. So mine will start with the ID issue and then the interfacing issue and then the data protection, that is the policy. So if I'm talking about the because the ID has already talked about it. If I'm talking about the interfacing, here we are looking at the information of your client plus the information of the companies of those clients. You will realize in our setup there will be the companies entity sitting somewhere. Then there will be the client sitting somewhere. So we are trying to get all those entities interfaced in one whole system so that the banks can have access to that. And then when we get to the data protection, what happened was that after this one, I think we're forgiven, but then we wanted to go to the phase two to say now we go and try to address the whole KYC issue. But then the data protection came and said, it's either you are the data controller or you are the data processor, meaning that they said you cannot access the information of the banks when you have not entered into consent with those clients sitting at the banks. So that's why we are still at the phase one, where we have now interfaced with the Minister of the Government. Thank you, sir.
Great. So I actually wanted to talk a little bit about that. So Raul, I think you have this unique perspective, and I wanted to see how much of it you are comfortable sharing. You've been involved in, the infrastructure of multiple countries, starting, we go back to Aadhaar, India. Um, I just maybe thought you could tell us a little bit about your journey going from, hey, we're going to build this massive centralized system to, now obviously for those of you who were there yesterday, Raul shared his perspective on the benefits of a decentralized system and his newer perspective. Tell us about that journey and how you got to where you are.
Okay. Uh, I can spend the whole day, but let me try to summarize it. As I said, yeah, it was natural that when countries like India started building that program, it was one of its own kind, right? I mean, there was nothing like that at that scale. So the natural approach was to build something centralized you can control. But they were fortunate enough that not only the market came up front and participated, and the economics worked out very well for the country, but they were also, let's say, self-funded, and they invested and they could put up the infrastructure. Now, not every country is capable of doing that. Followed that by with that was Indonesia, which I was the architect for the entire national ID. It's 230 million people with 10 fingers, iris, and face. The second largest database, if you will, for civilian population. Same story, huge investment, capable to do that. No worries. Uh, But that is where I realized that creating an ID is just the beginning of the journey. If you do not utilize that ID, it's pretty much useless. I'm very blunt about that. So how do you then start creating the utilization of that ID and then creating a sustainable revenue generation method? Again, India was probably the first to come up with a great idea of centralized authentication, followed by, let's say, the Indonesians who said, okay, we should also be doing the same. It took 6 years to pass the regulation to say that we can actually charge for it for the Indonesians. So, great story again. I mean, suddenly you have this massive infrastructure scaling up because you're hitting the central data centers for doing authentication. People are either submitting faces or fingerprints or iris, and you can imagine biometrics are the most compute expensive part in that process. Um, Again, these countries could afford to do it. There is, money in there, and then the private sector is paying. But then, as we moved into other countries, we are starting to see that, uh, there are limitations on how much money they can bring in, how much infrastructure they can set up. It's not only about compute infrastructure, cybersecurity, connectivity, and so many things. So while we were dealing with these problems, we started to think about decentralized identification methods. So we came up with this whole concept of a printed cryptograph, which is because we started with QR codes, we ran into storage issues. Then we came up with this whole concept of how can we store more in a printed form so people can walk around and get themselves verified. But then it created another problem for the authentication agencies because they lost the revenue because it's free in the market. So now sustainable revenues are gone. So that was when we, of course, not we, I saw EU doing a great job coming up with the whole decentralized concept. So the idea was like, how can we go and do this? Cut it short, what it does now is that it reduces the required infrastructure for the country to implement the whole biometric journey. So, and when I call it journey, onboarding a customer using eKYC plus strong customer authentication for financial transaction, if it is the same infrastructure, it's beautiful, right? Because you don't have to invest in two different silos. Now, if you can use that to build secure channels, sending money is also easy. Now your payment rail automatically became part of it. Of course, you can start sending digital assets, and then money is fiat currency is not the only thing. You can start sending tokens. And that forms the baseline for also delivering AI to the people. You can go into different discussions, but let's keep it to payments. So recently, we have seen a very good response from countries because they are saying that this is the way. Instead of me going borrowing 300 million, 500 million from the World Bank or some donor community, and then thinking, where do I set up this 1 gigawatt data center? Yeah, let me call somebody. Yeah, and then, well, do we have power for that? Yes, yeah.
Right.
So
Yeah, okay. It's fantastic to hear that journey and the different examples. Um, Nail, maybe I thought you could come back in and share with us, the ways in which now, as you try to do business, and you have Ethiopia is in this stage of transition in multiple ways, but certainly with respect to its ID infrastructure and to some extent payments. We know what's going on with mobile money, the entrance of M-Pesa. Um, so as you're building a payments company in the middle of this, there's 15 million people who have the new FIDA ID. There's 80 to 90 million people maybe that don't. There's many, many people who have Telebir, and there's some people who have M-Pesa, some that don't. How do you plan for, what pieces of infrastructure or what kind of fundamental rails you and your team is going to build on? Your startup, you've got limited resources, you have limited time. How do you navigate that?
That's actually a very good question. Um, so when we started Choppa, I remember um, we had to onboard businesses, basically, right? So I had to go to a bank and tell them like, why do I have to onboard the same business that you guys already onboarded? I mean, there must be a data center like the one in Europe. I think they have this thing. So there must be a data center where if the customer is actually willing to share his KYC, then it should be very easy to actually provide that to a financial institution. So we are doing the same thing what other aggregators or banks are doing. So there must be actually trust plus partnerships. I think that's where the partnership part actually is very very crucial. So for our part, actually in Ethiopia right now, uh, through Chapa, more than 2 million people in Ethiopia, they have actually gotten their FIDA, their national ID. So the payment trail that they used was Chapa. So that's one partnership that we are actually making in making sure this happen. And in the other part, as soon as we can be able to onboard entrepreneurs, then that would be much easier for us, to actually have even millions of customers. But right now we are stuck only into businesses and corporates, the government institutions. So I think that's one part. It's basically scaling up to other sectors as we are doing right now. And beside that, I believe there must be a layer on the national ID where you could actually be able to verify through recognition right now. So, but we are not doing. I think I'm not sure we haven't actually started that, but Smile ID is actually it's a very best part where they can get in because it's much easier. I mean, through OTP only, it's very difficult, to know if someone is um, what they are claiming to be, right? So there must be a face recognition on that. So I think that's one thing where we can be able to partner with companies like Smile ID to make sure this happen. So the next goal for Chapa is, of course, we have a plan, bigger plan to also work on neobank. Because I think that's the most important thing. I mean, people don't really have to go to the branch to be registered to access for banking. So there's a very bigger chance on that.
I was going to ask you a question. So when someone wants to get a FIDA ID and they're going to make a payment to do that, do you accept, like, how do you accept that payment? Do you accept M-Pesa? Do you accept Telebir? Do they have to come physically to your office? Do they make a bank transfer or through a gateway? What are the primary ways people pay?
So right now, I mean, through Chapa, we have API that we provided to the national ID. So the customer, they actually use any payment method that they prefer, either to bank transfers or wallet or through ATM card, what we call the debit card, or even through PayPal or like international cards.
Maybe I was going to ask Moselle to come back into this, and maybe Moselle, you can share. So in Botswana, how does this infrastructure, this ID infrastructure that you've built, how does it get paid for, by the banks that use it or by the consumers who are using it? Do consumers pay? Do banks pay? Does the government pay? Who makes it financially work?
Okay, thank you. Uh, what happens is that as a bankers association, we are an extension of the commercial banks, meaning whatever would have acquired is acquired by the banks. Our budget is coming from the banks. So initially, uh, we are we are talking about the infrastructure here. If you remember, my first statement was that let us go the interface way and then try to introduce the APIs, at least at the beta end, that is at our entities. So what happens with the interface is that you would have solved two problems. The first problem, if you interface, that is you interface logically. You do not need to spend too much.
You're out. Okay, let's try this. Literally, this is the story of internet of ID authority access
Okay.
reliability.
Oh, okay, okay. So I was saying with interfacing, you would have solved two problems. The first problem is that you are not necessarily going to spend too much into buying infrastructure or investing into infrastructure because you would be connecting logically. You do things like tunnel connections to the immigration, and then you expose whatever you have through the APIs to the banks. That is, you give them the standardized APIs to access through you from the core banking system. That is the first thing that we would have achieved. That is to reduce the spending on the infrastructure. Then the second thing from our market that side is the issue around the data protection. If, for instance, now those people, you are giving them the viewing and written rights. So meaning there's no how they are now going to harvest that information from the minister because we would have entered into a memorandum of agreement with the ministry to say we are not going to be harvesting this information. The other advantage with the interface is that, like I was saying, currently we are experiencing there are a lot of emergence around the fintechs. You will realize now people are doing mobile banking and so forth and so forth. So you do not necessarily have the information about the SIM cards or the cell phone number sitting with the immigration. You will realize that it is sitting with another body somewhere. So if you are interface, all you need to do is for you to allow a dynamic interfacing to incorporate even from those other entities. So that's why I'm saying you would have reduced the buying of a lot of infrastructure. We all know the banks, they are the most maybe money-making entities. But when it comes to buying infrastructure, naturally, they will rather tell you that they have already done their budget or they are still trying to budget. So I think the interfacing for me is the way to go. Thank you.
I have a funny story about banks and budgeting, and I learned this kind of lesson the hard way once, which is we were wondering why all the conversations we were trying to implement some new technology, and we were wondering why the CTO of this bank kept complaining about the price, and we were like, he should just be focusing on the performance, and then we realized that when they switched from doing manual verification at the branches to doing digital verification using APIs, they moved all of the cost of onboarding of new consumers from the branches to the CTO's P&L. So all of a sudden, he was having to pay for KYC that was never part of his budget before, and of course the bank was saving money now on all their retail branches, but they hadn't done the cost analysis and appropriately aligned incentives. So I can imagine how these conversations go. I wanted to get the audience in. We've got about 15 minutes left. Maybe Slido code, and there we go. Cool. So hopefully you guys have used Slido in the other rooms. We'll use Slido here. Just keep in mind when you post your questions to select Ballroom C. Otherwise, we'll have some other interesting questions should pop up in the other room. So if there's any questions that you have on the topics we've talked about, the DPI building blocks, the key principles, and then the experience across the real world, different countries, different industries. Love to hear your questions. And maybe while we're just waiting for those to come up, actually, let's see if I can get them here. The app. Okay, well, I'm waiting. Well, I'm waiting for those. Well, there we go. So what's your biggest challenge? Okay, what's been your biggest challenge in developing Choppa? Neil, this is for you. What's been your biggest challenge in developing Choppa? It's a classic entrepreneurial question. That's great. I feel like I'm back in a startup forum.
Okay, interesting. For sure, not the EKYC. um, it took us almost, I think, a year and a half to acquire the license. So during that time, I think it could give us, a good kickstart to research more and understand the market better, and also partner with banks. So I think the biggest challenge that I would say is the time it took us to develop, to basically acquire the license. It was a very long time. I mean, a year and a half for fintech world is crazy.
That's a lifetime in a startup.
Yeah, yes, it is.
Yeah. Marcel, we have a question for you. So, given the experience you described of people having to resubmit over and over different banks, are you planning a data exchange layer for dynamic customer data to between financial service providers? What challenges would you foresee if you were going to build a data exchange?
Okay, sorry. Can you come up again?
Yeah, so the question is, I'm just looking here from the audience, are you planning to build a data exchange layer between the banks so that customers can move their data between financial service providers, given the complaints that you've heard from consumers having multiple bank accounts and having to resubmit KYC every time?
Okay, thank you for the question. Yes, I'm planning that, but the most serious challenge is the issue around the data protection. So they normally the charges associated with violating them is so huge such that the banks now prefer to remain with their customers. But as for the identity, the one that I alluded to, the other challenge there that also forced the government to allow us to hook into the system there was that there were a lot of fraudulent cases at the bank. Somebody will maybe take out the picture of somebody and present a certified copy of Omang at the bank. So when they come across those issues, there will be a long process. They will have to write to the ministry, try to come and validate. That will take maybe weeks. But as we all know, the banks are mostly the entities which make it a point that efficiency is embedded into their applications or into their daily works. So that alone made the government, even even though they charge us for hooking into the application, the charges are not as too steep because they know we are also solving the approach. It was a national crime, so we needed to solve that. And then we have gone to table with them to say, let us now get other applications. Things like here, the identity that I'm talking about here is only for the citizens. We have not yet gotten to the foreigners or those who are just going there to work temporarily. So we have gone back to the government to say, allow us to have those standardized APIs so that we dynamically allow our entities to connect to ourselves. But I think it's something that we are still working on. Thank you.
Thanks, Moselle. Raul, there's a question about the decentralized setup. What does it look like and examples? Maybe you can give us the Twitter version of decentralized ID system.
No, thanks for asking that question. Because it's a proud moment. Yesterday, Ethiopia launched their FIDA Pass, their decentralized digital ecosystem. It's very complex to explain, but it's one of its kind in the entire world, I would say. So Ethiopians are going to be proud example for the emerging markets. Shorten it, where the EU is doing LSPs to experiment with the whole EIDAS regulation. I think Ethiopia is already going live with it. So we were able to integrate one use case, which is bank account opening. So somebody can sit in their house in 2 minutes or even 20 seconds, open a bank account in compliance with their banking regulation. They've also integrated the educational authority to get your educational certificates. And then soon to be integrated is the tax authority to get your tax clearance certificates. It is all done through a decentralized infrastructure. Nobody's managing the data. There are broker, no centralized authentication, and so on. So it's an amazing achievement for this country, and I think it will set an example not only for Africa but rest of the world. The other good example is we are going live in Honduras, a country of 10 million people, starting with 5 digital IDs, national ID, foreigner's ID, driver's license, gun permit, social security, and then integrating with the bankers association. So people can do the same thing without going and stepping into the bank environment, do their whole eKYC process through that state-sponsored application/wallet. And then it opens a whole ecosystem for all kinds of other stuff, from borrowing loan for their small businesses to payment transactions and so on. It also has a peer-to-peer encrypted messaging system, which allows people to not only chat with each other, but share identities, assets, could be currencies, as I said. So to summarize, it's meant for the emerging markets, thanks to the people who have put a lot of $1 million in efforts into it. The whole challenge was how do you contextualize it and bring it to the markets. So finally, I will say is that we meet a lot of countries who say we have a nice 2030 digital transformation plan, vision, but how do we get there? And now we have an answer. We say, you do exactly what has been done by these countries, follow the footprints, you will be live in another 6 months and starting interacting without having to spend hundreds of millions of dollars in infrastructure.
Cool. Then that's fascinating. So there's another question. Question here. How do we balance? How do you, how do we balance market-led considerations on interoperability and uh, and policy objectives, since the motivation is to make use of the payment landscape? I think to make sure I understand this right. To make sure. Hello? Okay. To make sure I understand this question, I think it's kind of a question of how do you balance public policy objectives around, let's say, let's say data privacy or interoperability, with also the desire to encourage private companies and monetization. Um, Neil, maybe you could comment on, what parts of the process do you want the government to do, and what parts of it do you want to do, when it comes to either identity or payments or the different, value propositions that you're offering?
Okay. I think it's a very strategic question, I would say, and the one that's very needed from the government is creating a sandbox environment where we can test our ideas. Um, and for that, actually, especially in the crypto world, now I hear there is some activities on that. The government's actually creating a sandbox environment for crypto and blockchain, which is very, very useful. Um, and for us, I would say it's more of partnerships, also in the data privacy, are very, very crucial. So it's basically evolving in these aspects.
It sounds like you want the government to create a safe space where you can innovate and try things, and I guess in doing so, they get comfort, and you get comfort that you can actually roll these things out and they'll work and not hurt people or lose money.
Exactly.
Cool. Um, there was a there was another question I wanted to get down to here. Um, oh, this is a fun question. Okay.
Perhaps, Mark, if I may
Yeah,
add to that.
please.
So interoperability, public policies, and privacy, right? So this should not be an afterthought. It should be built into the ecosystem when you build it ground up. Um, it has to be an open ecosystem, and it has to allow the local, let's say, private industry to leverage the government as a service to build value add services. This will only improvise and make a better service options for the users, right? It should never be compulsory. It should be never compulsory. Citizens should have the right to choose one of the services,
Yeah,
and let the people decide what's the best option for them.
I think I think the best option will be next time we're going to each bring our own microphones.
Mics, yeah.
Decentralized
Yeah, bring your own ID.
media. Um, there's a question. We've just got a couple minutes left, but there was a fun question here, and maybe we can each take a shot at it. Uh, will there be a true consumer super app for Africa? What will it look like? Will it be an identity wallet, a payments app, e-commerce, something else? What do you see if you kind of squint and look, 2, 3 years into the future? What do you see? Maybe Marcel, you can give us your starting.
Okay, thank you. I think it will be an identity wallet. The reason being that when we talk of an identity of a human being, here we are trying to look at the issues around the ID, but there is also the MNO side. The MNO, I'm referring to the mobile network operators, where you have the SIM cards and so forth. So if we are going to now have an identity wallet seated somewhere or centrally seated somewhere, and then try to maybe hook into that and get whatever we want to do, that is to get a verification for the payments that we are going to be doing. I think the identity wallet for me is the way to go.
Cool, Raul.
I'll take a quick one. So it will be an everything wallet. Basically, it will do everything that's mentioned over there. It will be a super powerful wallet. But the way I see it is that it will evolve locally, so country by country. Then, because if it is based on standards, they will start to form alliances, and then it will evolve into a regional wallet. And there could be then be a standard for a continent-wide wallet, right? So there will be. I mean, we have already seen some discussions between countries, bilateral discussions, saying if you have a wallet, in my wallet, can I verify? Can I do remittances on that? And like Honduras and US cross-border remittances, then it's easy because it's standards based. So I think it starts everything wallet, and then it evolves to an agent.
Yeah, I think here is the question about which one is infrastructure as a service, because that's the most crucial thing where we are building on top of that, SaaS basically, right? So from here, basically the IaaS is the identity wallet for sure.
Cool. I thought I'd maybe just add my two beer to this, which is I actually think and I agree, Rahul, with kind of, and I actually agree with all the panelists. I agree it'll be kind of based on some foundational identities with that's created the trust that allow people to to actually get into this app. Maybe it'll be regional apps, so there'll be a different one. There'll be one in Kenya, maybe one in a different part of Africa, one in West Africa. And then you'll start to see these consolidate. But what I think actually the technology to do this, to power this, is mostly here today. I actually think that what the reason why it doesn't exist yet is that getting people to adopt technology is kind of always like the hardest part, getting people to change. And the economics have to be better for all involved. And when you have any kind of existing, or vested interests, they will probably slow down, innovation. But I love this conference because it brings together people who are obviously working in huge institutions, people who are trying to innovate, people who are trying to find a way through to build the future. So, anyway, thank you so much for this panel. We've had some great questions. I hope you all enjoyed this, and looking forward to the gala later. Cheers. Thank you for joining.